November 2021, question 1A. Remember, question 1 is normally compulsory. Yeah? So this question, all the students were required to attempt it, and it was actually having 10 marks about the ledger accounts. You are told that the following transactions are from the books of Keshakuta Enterprises for the month of March 2020. So we are given the transaction that occurred on March 1, whereby we are told that started business with 100,000 shillings in cash and 900,000 shillings in the business bank account. Anybody who can try and maybe tell me which account should be debited and which one should be credited from that transaction that occurred in March 1. Somebody to say, I can try.
I can try, Mwalimu.
Yes, go ahead.
So I started business with 100,000 in cash.
Yes.
So the capital account, we credit it with 100,000.
Yes.
And then we open a cash account and a bank account.
Yes. You are on track. You are on track. Continue.
On the cash account, we debit 100,000, and on the bank account, we debit 900,000.
Yes, and the same 900,000 should also be credited in the capital account.
Sorry, yeah, on the capital account, yeah, sorry.
In the capital account, on the credit side, we shall have two entries. One of cash of 100 and the other one of bank of 900,000. And then the cash and bank will be now debited individually with their respective amounts. Let us record that. This is what will happen. We shall come here and open our capital account. This capital, it is in the cash account.
Yeah, the network is not clear, and this is very important.
Hello?
The capital account, we have two credit entries of 100,000 and 900,000.
Sorry for that. Let me use my data. I think the Wi-Fi is not stable.
So the capital account has two entries, credit entries, and then bank has a debit and cash has a debit.
And then we have the bank account. Remember what we said, capital, when it is being deposited in the business, we always credit the capital account. But this capital, it is in form of cash and also part in form of a bank. So you'll come here and you say, this is the March 1. There is capital that is in cash form, 100,000. The same date, there is capital that is in the bank, 900,000. Then you'll come for cash, the capital that is in cash form, we debit it in the cash account. And then we write here capital, 100,000. Then the one that is in form of, or the one that was deposited in the bank, we debit in the bank account. So you come here and you say March 1, the capital of 900,000. So that is how the transaction number 1 will appear in the ledger accounts. Both credited here, but debited individually in their respective ledger accounts. Let's go back to our question. Match that bought furniture for 300,000 from Furniture Limited on credit. So you need to note here that we have acquired an asset, but this asset has been acquired on credit. So there is a liability that we have created. Anytime a transaction is done on credit and we are purchasing or we are buying, the seller becomes a liability to the business and his or her account must be credited. So how are we going to record that? Somebody else to try? We bought furniture. Remember what we said about furniture and any other fixed asset? Who will try?
I can try.
Yes, go ahead.
So we open the furniture limited account and we
Yes, furniture enterprise.
Furniture limited, and then we credit it with 300,000, and then we open should we call it a fixture and fittings account?
What did we acquire? We bought what?
Furniture.
We just opened a furniture account.
So the furniture account, we will debit it with 300,000.
Exactly. What we bought is what we debit. We shall debit this. And this is much that we bought it on credit. So here we write the person from whom we acquired. Sorry. Who is furniture? 300,000. Then this one is a liability. We need to pay this person at a later date. Anytime we create a liability, credit that liability account. Right here what you acquired. A furniture of 300,000. Furniture of 300,000 like that. And it is sorted. Let's see what happened on the next date. On 8th, paid 150,000 for rent by check. Paid 150,000 for rent by check. Who will go? Who will try that transaction? Rent of 150,000 was paid. Rent of 150,000 was paid by check.
So I can try.
Yes, go ahead.
You open a rent account.
Yes, rent is
and you credit because cash is going out.
Which account are we going to credit?
Paid rent sales. Rent accounts you credit. Is it?
No, you debit.
Paid rent. No, rent received. No, it debit.
Yes, this is rent paid. Yeah. We only credit received, but rent paid, debit rent paid or rent expense account by the amount that was paid, which is 150,000. This is March 8th. It was paid by check, so it is going to reduce money in the bank. 150,000. Then we proceed to the bank account. That money or that transaction reduced the money in the bank. So we shall come here and record March 8th what we paid, which is rent of 150,000. Like that. We credit rent, we credit the bank because it is money out. We debit the expense that was paid. Again, the next one, 11th, bought goods, 80,000 by cash. Somebody who is having actually an idea? Bought goods, 80,000 by cash.
Can I try?
I can try.
Yes, Lydia.
So we create a purchases account.
Yes, anytime you hear the word bought goods, we say you should proceed and have your purchases account ready.
And we debit with 80,000.
8,000, which was in cash form.
Yes. Then we go to the cash account.
Yes, cash account, this is money out. So what do?
We credit it with the 80,000.
Yes, for purchases. Correct. You can see now you are okay. You are okay with these transactions. On 17th. Let me share. On 17th, we are told sold goods worth 30,000 on a credit to Wamba. Sold goods. The goods that we bought, now they are being sold. We said when goods that were bought are being sold, we record them in which account?
Sales account.
Yes, the opposite of purchases is sales. Open a sales account. And sales account, now we credit. When we purchase, we debit purchases account. When we sell, we credit the sale account. But the idea here is they must be goods. So we shall come here and say March 17, they were sold on credit. If it is on credit, you write the name of the customer, Wamba, 30,000. Then we don't have an account for that particular customer. We open one. We open one for that customer, who is Wamba. On the Wamba account, he's a customer. When we purchase on credit, we normally credit the supplier. But when we sell, this customer has our money. This is an asset to the business. We debit. Right here, March 17, as a result of sales, 30,000. Or this person owes the business 30,000. It is an asset. It is an asset. So we debit. On 18th, we are told purchased goods worth 350,000 from Banita Traders on credit. We purchased the goods. So already we have said when goods are bought, where do we record them? Goods. When goods are
So
bought,
we debit the purchases account.
yes, we debit the purchases account by
We credit 350,000. And then we open an account for Banita Traders.
Yes, so here we shall write Banita. On the purchases, we shall debit purchases by the name Banita, 50,000. Yes, then we proceed and open Banita account. Who is Banita? The business, a debtor or a creditor?
A debtor.
No.
Is a debtor.
A creditor.
A creditor.
Yes. The person from whom we have purchased an item is a creditor. A debtor is the person to whom we have sold goods. So Wamba is a debtor because he has our money, but Banita is a creditor because we owe Banita. So this one is going to be credited by, this is March 18th. You write here purchases.
Mwalimu,
Yes,
kindly go back kidogo
yes,
and make that clarification of when we have sold to somebody,
yes.
what we refer to them and when we have bought from them, because I think it's going to make a very big difference in interpreting the
Yes.
whole document.
Okay, let me say this.
Mhm.
You know insurance account, These people that,
Yes.
if we write the name of a person on the credit side, it simply means that this is a debtor. This person has the business money. Because when you sell goods on credit to somebody, it is that person to pay the business. So this is a debtor. This is a debtor. We sold goods to this person. So it is not the business that owes the person, it is the person that owes the business. And a debtor is an asset because he has or she has money that belongs to the business. But when we go now to purchases here, this Banita is a supplier. And therefore, we owe Banita. And anybody who we owe as a business is a creditor. Is a creditor. The same case applies to this person, Furniture. This person, Furniture, is a creditor. So creditors, we normally credit their accounts. Even Banita is going to be credited the account. But debtors, those who are going to appear in the sales account on the credit side, if it is the name of a person, that person is a debtor, and the debtor will be debited. The same case we have done here with Wamba. Is it coming out clear?
Yes, Mwalimu, very comfortable. Thank you.
Yes. That is done. On the 22nd, goods worth 5,000 were returned by Wamba. Remember Wamba? We had sold goods to that person, but the person is not comfortable with the goods that we have sold to him worth 5,000. So the person returns the goods back to the business. So goods that were sold because they are under sales, but now they have been returned back are the goods that we said they are known as sales returns. Those are known as sales returns. So we need to proceed and open an account called sales returns account. Sales returns account. Sales returns account records goods that have been returned by a customer back to the business. Any goods returned back to the business by a customer to whom we had sold goods to, they are known as sales returns. It is actually the opposite of sales. When we sold goods to Wamba, we credited sales. But when Wamba returns the goods, we shall debit sales returns. Here in the sales, they are credited, but in the sales returns, we debit them. We debit them. So we shall come here and record. This is March 22nd. Goods have been returned by Wamba. Like that. So this is a sales return. So then we shall go to Wamba. Remember, Wamba was supposed to pay us 30,000. But the person has returned the goods worth 5,000. This 5,000 should be deducted from this 30,000. This 5,000 should be deducted from this 30,000 by crediting his account. So it is going to be debited here. We credit here to complete the double entry. So this is March 22nd. You write here, the other account is here in the sales returns. So note that when goods are returned by a customer, we normally credit the customer who has returned the goods, we debit the sales returns. To the sales returns, it is always going to be debited. Then we shall complete the double entry by crediting the respective customer who has returned the goods.
Mwalimu, is that sales returns account the same as return inwards?
Exactly, yes. Sales returns is the same as return inwards. Even if you come here, you write return inwards account, it is one and the same thing, and you are 100% correct.
Thank you.
Yes. Higher. We proceed unless somebody has got a question. It's very encouraging. Now you are getting the concept right. We proceed to the transaction. Hope you can be able to trace your questions. The transaction that occurred on 24, borrowed. Remember, anytime you borrow or you buy on credit, that is automatically a liability you are creating. Anytime you borrow or purchase on credit, it is a liability. But this time round, what we borrowed is 800,000 from Shaloko Bank. we borrowed 800,000 from Sharoko Bank. They did not tell us whether we received the money by cash or check, but we assume it was deposited in the bank, but they needed to tell us. Borrowed 800,000 from Sharoko Bank. So what will happen? Sharoko will be our liability. Sharoko account. This is a liability. Anytime you borrow, the person from whom you have borrowed is a liability and should be credited. So you come here and you say this is March 24, what we borrowed or was deposited in the bank, 800,000.
So Mwalimu, there, do you assume that it's been deposited in the bank, or if you either put it in cash or bank,
You get
still
it, huh?
correct?
Even if you go to the cash account, you will get it right, huh? Because
Okay.
actually it was left hanging, so they cannot penalize you for not having given you complete information. Because others, they can tell you borrowed 800,000 from Sharoko Bank, the money was received in cash, or the money was received in check. But let me put it in the bank. So I will just proceed to the bank. Remember, we borrowed, yes, we have created a liability, but at the same time, we have received money. I will come here now and say on 24th, I received the money from Sharoko, 800,000. So I debit it there. I receive in the bank. At the same time, I've created a liability, I credit. Lastly, we withdrew 200,000 from the bank for office use. It was withdrawn from here. 200 for office, not for personal. If it is for office, it is going to the cash. But if it was for personal use, we could have debited drawings. Get the difference? Office and personal. This one is for office use, meaning that it was withdrawn from the bank and it was deposited in cash box for use there. So we shall credit bank because that is where money is moving out. Right here, the money is going to cash. Then what do we do to cash? We receive it. We receive it in cash on the debit side. And the money is from the bank. And those transactions have been completely recorded in the books of account. They have been recorded in the ledger account. So the only new thing I want to teach you today is about balancing them. How do you balance them? How do you balance them? Balancing a ledger account is a very simple task. A very, very simple task. What you do, for each and every account that you have opened, you actually determine which side is having more and by how much. Like in this first account of capital, on the credit side, the capital is having 900,000, but on the debit, there is nil. So I need to balance. By balancing here, I mean, what I have on the credit should be the same amount that I have on the debit. To do so, I will just come here and total this. This one will give me 1 million. So therefore, for these two sides to have the same, then I need to also have here 1 million so that they can balance. Now let me tell you how we call this amount that we have inserted here. Remember, this amount was not here. The money that we have inserted so that the account can balance, we normally call it as balance carried down. Balance carried down. That is now the closing balance. So I'll come here, the last date, let us say the month was ending on 31st. I'll just write here balance T/D. Balance carried down. Balance carried down. 1 million. Remember this 1 million, it is now the figure that I'm going to put here so that my two sides can have equal amount. The two sides can have equal amount. So just total the side with higher amount, and then if the other side does not have anything, you transfer that money here. You call it balance carried down, and then make sure this 1 million here and this 1 million here, they are on the same line. They must be on the same horizontal line. Make sure that there is no figure that is above the other one, one horizontal line like that. Then what you do, this is the closing balance. So it simply means that by the time we were ending this month of March, by the close of month of March, our capital account was 1 million. Remember, a business is a going concern. What you close with is what you open with the next month. So when we shall be starting our new month, which is now going to be April, we are going to have a starting capital or the opening capital, not starting capital, but opening capital. So what you close with is what you open with. Now, get me right here. This 1 million was more on the credit. It is the credit side that had more than the debit. So this balance that we have indicated here, it is the balancing figure, but we normally call it a credit balance because it is the credit that had more. So when we start the new month, which is April 1, we shall call that amount as balance brought down, 1 million. The closing balance is the opening balance. The closing balance is the opening balance. So the closing balance, we normally put it on the side that has less so that the two sides can balance. But now when we start the new period, we shall take it to the credit because it is a credit balance, meaning that it is the credit that had more than the debit. That account has been completely been balanced.
Sorry, Mwalimu, just a quick clarification. So at the bottom there, you will indicate 1st of April.
Yes, the next month, the beginning of the next month.
Yeah.
Balance
So, but it will be the same ledger right underneath the summation where you put,
Yes.
right?
Yes, just below the totals. The two lines means the total. Just
Okay.
before the total, you write the same balance that you carried down. The balance carried down is always the balance brought down, the same figure.
So you at there 1st of April you'll put balance carried down.
No, carried down is the crossing, but it is brought down or brought
down.
Brought down, B stroke D. Brought down the previous period or previous month. Understood?
Understood.
It's not balance brought forward.
Brought
Is there a
forward,
difference?
Brought forward and brought down is the same thing. Even here we can write balance carried forward. If you write here balance carried forward, here you write balance brought forward. If it is carried down, brought down. The same thing. So.
Thank you, Mwalimu, for that. I've always been getting confused also.
Yes, brought down and brought forward is the same. Carried down and carried forward is also the same. So you decide which one to go by. Let us balance the cash account. Look at the cash account. On the debit side is what we received. On the credit side is what we spent. So if we received the 300,000, we spent 80, automatically you can be able to calculate the balance. But this is how we do it now. Here, it is the debit that has more. So we add the debit first, giving us 300,000. The question now we need to ask ourselves, already we have got 80,000 on the credit, which figure are we going to put here so that when we add to 80,000, it shall add up to 300.
220.
Yes, 220. All of them, we shall be balancing them on the same date, March 31st. Right there, this is the crossing balance carried down to 20,000. That is the balance. So that plus the 80, they will give us 300,000 that we have on the debit. This 220,000 is a debit balance. The reason being, it is the debit that had more than the credit. So when we start the new month, we shall record it here. We shall record it here. April 1, balance brought down 220,000. What you realize is this: carried down and brought down, they can never be on the same side. If carried down was here, brought down goes there. If carried down is here, brought down goes here. They can never be on the same side. But ideally, the brought down belongs to the side that had more. In the first case, it is the credit that had 1 million, this one had none. So brought down will be there. In this case, the cash on the debit side was exceeding the credit side by 220. So this 220, it is on the credit for balancing, but we bring it here because it was a debit balance, because it's the debit that had more. Hi. Bank, look at the debit of the bank. 1,700,000. Here, 350,000. So this side has more. 1,700,000. Which figure are we going to put here on March that passed as balance carried down, so that the two sides can have the same total? 1,700,000. There is a figure that we need to insert here, so that when we add with the 200 and 150,000, we shall have the same total.
1,350,000.
1,350,000, so that we can have 1,700,000. You see now, it is the debit that had more than the credit. So that balance belongs to the debit when we open the new month. The balance brought down should be the same figure, 1,350,000. Always, balance carried down, balance brought down, it is the same figure, but on the opposite side. And the brought down should always appear below the totals, below the double lines. The totals should be on the same horizontal line. Those accounts are done. Let us come here. Furniture enterprises, credit 300,000, debit nil. The end of March that one. Balance carried down. The figure that we need to put here so that it balances. By putting that, our account has balance. The carried down is what you are putting there so that the two sides can balance. But now the brought down, you take to the side which had higher amount. In this case, it is the credit that had 300,000, whereas the debit had nil. So you come here and you say every one, it is going to be balanced, brought down 300,000. What you have carried down is what you bring down. Furniture account, debit 300, credit nil. So that is where we are going to have our carried down on the credit side. As balance, carried down 300,000. This side we have 300,000. This side 300,000. Carried down is here, meaning that it's the debit that had more. Right here, April 1. Balance brought down on the debit. Rent account 150 on the debit, nil on the credit. So we balance. Always note, we balance using the last day of the month. The balance carried down is at the last date of the month. The brought down is at the first date of the next month. Carried down is on the credit, meaning that it is a debit balance. Let me see whether it is
Mwalimu, you are lost.
Sorry. Just a minute, we are moving on. Just a minute. Let me take a precautionary measure here. Now we can move on. The purchases on the debit 80 plus 350 is going to give us 430,000. So as at March 31st, we should have balance carried down of 430. So that here also we can have 430,000. If the carried down is on the credit, it simply means that it is the debit that had more. So we bring it forward on the debit side on April 1. Put it down for 30,000. For sales credit, we have got 30,000, debit nil. So this is March 31st, balance carried down. Carried down was on the credit, meaning that it is a debit balance. It is a credit balance, sorry. April 1. Carried down is on the debit, meaning that it is the debit that had more. That is where the balance brought down belongs.
For which account?
Yes. Then I will just progress to Wamba account. Wamba account, the debit is that 1,000, the credit is 5,000. So here we miss 25,000 so that it can balance. And actually that is what we are demanding from Wamba. Remember we had sold goods worth 30,000 to the person. The person returned 5,000, so we deduct. So this is as that March 31st, the balance carried out. Here we shall have 30,000. Here we shall have 30,000 as well. So as we begin the new month of April, this person has got a balance to pay of 25,000. The closing balance. Banita, the creditor, we purchased goods worth 350,000. Account was credited. 350 here, nearly here. So here we need to have 350,000. March 31st. Balance carried out. So that we have 350,000 here. Here we have 350,000. If the carried down is here, the brought down is going to be there. That is April 1. Sales returns, debit 5,000, credit nil. Balance carried down 5,000. We have 5,000 here. We have 5,000 here. If Carried down is here, brought down is going to be here, everyone. The last account is for Shaloko. Credit 800,000, nil on the debit. Balance carried down 800,000. If carried down is on the debit, brought down must be on the credit. And that is the end of balancing. Anybody with a question on the part of balancing? How we balance? Yes.
Mwalimu, I dropped off at some point with my internet. So a quick question. So if there is something on the other side, like for example, if there is I don't know. If you put capital, okay, let's say the furniture account, there is some money on the other side, but it's not the same. So how do you balance that?
That is what we have been doing on the cash account. The bank.
I missed that. Maybe I missed that. My internet had dropped off.
Okay. So what you do, remember, let me just go back here. Let me just lab this part for cash. Remember the cash account.
It's like there's someone who has another class going on somewhere.
It is the other room.
Oh.
It is the other room. So our cash account before we started balancing was like this.
Yeah.
There's 8,000 here and here there's some amount. What you need to do, you just identify which side has more. If you have a clean book, you find that the debit has got 300,000 if you add the two. But on the credit it's only 80. So what you do, total is one that has more. If they are going to add up to 300,000, ask yourself, which amount are you going to indicate here so that now it will also top up to 300,000?
Okay.
So which amount are we going to put there so that we also have here 300,000 so that the account can balance? We all agreed the missing amount here is what? 200 and 220.
So sorry, 220. Yeah.
Yes, that is what we call the balance carried out. It is simply the amount. The side that has less, it is having less. So,
Okay. All right. Thank you.
yes. So we bring it here as everyone balance brought down. The carried down and the brought down should always be the same amount. Should always be the same amount, like that.
Understood. Thank you.
Yes, welcome. The last thing we shall do is to extract a trial balance. We need to extract a trial balance. This business of ours was referred as what? It was known as the following transactions are from the book of Keshakuta. Come here. Come here. And have a trial balance. So a trial balance is very simple. It is known as Keshakuta Enterprises. Then you write here trial balance as at the date that we have dated our balance carried down, as at March 31st. It was in the year 2020. This is a very simple trial balance. The trial balance will have 3 columns like that. The first column is to record the accounts that you have opened. Then we shall record the debit balances. We shall also record the credit balances. The account.
We don't put the date, Mwalimu.
All the dates are 31st. We have dated here. Trial balance at 31st. When we had our balance carried down, all our balance carried down are dated 31st March.
Okay.
Yes. So what you do, you go to each and every account that we have balanced, and then you pick the balance brought down. The balance brought down, because that is in the correct side of that account. The balance brought down. The balance brought down, not carried down. The balance brought down. That is the balance that is on the correct side of that ledger account. So the first account that we had was capital. How much was our balance brought down, and it is appearing on which side? From what you have in your books, before I turn my laptop.
Mwalimu,
100,000.
yeah.
Capital.
It was 1 million.
It's
1 million.
1 million
1
on the debit
million
side.
on
Yeah.
the credit side.
Yes, 1 million on the credit side. So you write here the account is capital. The balance is 1 million on the credit. So you indicate it on the credit column like that.
Sorry, Mwalimu, I thought they brought. Okay, I'm not understanding there. I think I'm a bit lost.
Rebu, can you see where you are lost? We clarify.
So the capital account, yeah, on the
Yes.
credit side, there's already 1 million.
Yes.
So the balance brought down is on the credit is on the debit side, right?
No,
Let me go there. Let me just proceed there. Yeah. We are in the capital account. It is here.
Mm.
The carried down is the one that is on the debit. The brought down is on the credit side.
Okay.
Yes.
Okay. I understand. I've understood. Okay, I got it. I got
Yes,
it.
this is what
got
I said. The brought down is the one that is on the. Remember, the carried down, we only imposed it there so that our account can balance. But that balance came as a result of the credit having more. It is the credit that had more. 100 plus 900 gave us 1 million. There was nothing here. So this figure, 100 million, was obtained from the credit side. So
The credit side.
it's a credit balance. Yes.
Mwalimu, a question or maybe clarification.
Yes.
You have said, so what you're saying is that for a trial balance,
Yes.
we specifically pick the balance brought down.
Yes, always.
Okay.
Pick the brought down. Those are the balances that are on the correct side, the sides that had more than the other side.
Okay.
Yes. And let us come here. Higher. We are done with capital. The next account that we had was cash. Cash, the balance brought down that we reported was how much and on which side?
220,000
Yes,
on the debit side.
220,000 on the debit, correct?
20.
20,000 on the debit.
Yes.
We come here and indicate 220,000 under the debit column. Under the debit column. The next account that we had was bank. That we just is. The next account was bank. The balance brought down was how much? Which side?
Debit,
Debit.
1,350,000.
Yes, debit 1,060,000. The next account was furniture enterprises. The balance brought down
Credit, 300,000.
of 300,000. You put it under the credit column. Then we had another account by the name furniture. Furniture account, the balance brought down,
300,000 debit.
100,000 debit. The other account was rent,
150 debit.
2,000 on the debit.
Mm,
The other account was purchases,
430,000 debit.
1,000 debit.
430.
Yes, 430 debit. Followed by sales. Sales account had
30,000 credit.
2,000 credit. Wamba,
25,000 debit.
25,000 debit.
25. Yeah.
Yes, then Manita. Manita was having. Manita is here. The balance brought down is 350,000 on the credit. 350,000. Then we have got sales returns, which is here. It was having a debit balance. Sales returns account, debit balance of 5,000.
Or 5,000.
Lastly, we have Sharon.
I'm not seeing your screen, Malim.
Currently, those who are speaking, once you speak, mute because you are the teacher's board is disappearing when you don't mute.
Yeah, kindly, when you don't mute, they will see you on the screen. Sharoko. The balance is 800,000 on the credit. Can you try to add the two columns? The total on the credit, the total on the debit. Add the two of them. All the credits downwards and all the debits downwards.
$2,480,000.
2,480,000. Both sides.
Yeah.
$2,480,000 on the debit and also on the credit. So if your ledger accounts have been properly prepared, you have accurately balanced them, this is what you should have. The total on the debit and the totals on the credit, they should agree. There's somebody who is giving some advice there. If whatever that you have been doing all the way from posting the transactions in the ledger accounts and balancing has been well done, this is the case that you are supposed to witness. The totals on the debit and the totals on the credit should be the same. The total debits, the total credits, they should be the same. And why actually should the total of the debit and the totals of the credit be the same? Because of one simple reason: double entry. One reason, which is double entry. Every single amount was debited somewhere and credited somewhere. The same amount was debited in an account and credited in another account. So if we have done that religiously, therefore the total debits, they should be equal to the total credits, and therefore your trial balance should balance. Your trial balance should balance. But if you have done a mistake or two anywhere, which are not in one way or another affecting the two sides equally, then your trial balance will not balance. Either you have done an arithmetic error somewhere, instead of doing double entry, you did a single entry, you debited and credited with the different amounts, your addition and subtraction has been incorrect, your trial balance will not balance. But if everything has been systematically been done, you have ensured that double entry has been observed, you have balanced your accounts accurately, your trial balance should not fail to balance because of double entry. Because of double entry. So that's why we say double entry is actually the lifeblood of accounting. Once your trial balance has balanced, this trial balance now will be used in preparing the next books of accounts, the financial statements, So any question, any clarification?
I have a question.
Yes.
Now, according to the question, itself,
Yes.
we had been told to enter the above transaction in the relevant accounts.
Yes.
So when a question comes, we are not supposed to balance to. Are we supposed to balance with just or is
Yes.
just
You need to go and balance,
entering?
but don't extract the trial balance. Huh? Just open the ledger account, post them and balance them, leave them at that point. Don't go up to the trial balance.
Okay. Okay.
Yes.
Thank you.
Okay. But the good thing with accounting, we mark entries. We don't mark the final answer. So every correct entry is a mark. So you maximize. Make sure you enter as many correct entries as possible, if not all of them. We normally mark entries and not the final answer. So you might find that the purchases, you made a mistake somewhere, but you still have some 1 or 2 marks there. We don't mark the final answer. But that one.
Well, excuse me.
Yes.
So if we are to do the trial balance, the question will be very clear on the same. We are to complete the process or what you've just taught us.
If you are told to prepare the trial balance, huh? If you are to
Yes, the question.
Go ahead.
I'm saying if we are to do the trial balance up to the whatever you have showed us now, will the question be very clear on that?
Yes, the question will be very clear. We will tell you required A, open the ledger accounts and balance them. B, prepare a trial balance. It will be very
okay.
Yes. Okay, if that is okay, I want us to proceed to question 2. Let me see. And then it seems we still have the new members in the class. Kindly, the class rep, you can share our class WhatsApp link so that they can be able to join. As I prepare to share the next question, which I want us to do orally, and then on your own free time. On your own free time. I want to give this one as an assignment, and then you will share it on the LMS. I will just create an assignment Dropbox. You drop that so that I can be able to see how well you have understood this area. But let us first of all have a brief discussion on it.
Mwalimu, we do the ledger plus the trial balance.
Yes, you do up to the trial balance. You do up to the trial balance. The question number 2 says, Hadija Enterprises Limited started its operations in June 2018 with 4 million in the bank account. Obviously, starting the business, capital must be involved. 4 million in the bank. So what will be the 2 accounts affected there?
Capital and bank account.
Which one to be credited?
Capital account to be credited, bank to be debited.
Exactly. June 3rd, bought furniture worth 300,000 by check. Bought furniture. Which account to debit, which account to credit?
Furniture account and bank account.
Those are the accounts to be opened, but which one to be debited and which one to be credited?
Furniture to be debited, bank to be credited.
Correct. On 6th, somebody else to try. Bought stock worth 800 by check. Bought stock. Remember, stock is the same as bought goods.
We a purchase account, Mwalimu.
Yes, by
The
check.
bank account.
Yes. Those accounts,
Sorry,
those accounts are correct, but now which one to be debited and which one to be credited?
we debit the purchase,
Yes,
we credit bank.
correct. Then 10th, we are told that sold goods for 700,000. Sold goods for 700,000 to Sana Traders on credit. Anybody
I
who,
can try,
yes,
again.
yes,
We open a sales account,
yes,
and Sana Traders.
yes.
Mwingine endelee hapo nikifikiria.
Na ndio mwingine anajitolea.
Purchases account to be
Ah.
debit.
Tuko 10, sales and the Sana. Sales and Sana accounts. So it
Oh,
is,
Sales. So sales will be credited and then no. Yes, sales will be credited and then it's Sana Traders to be debited.
correct. When you sell goods, obviously don't think about 2 ways about it. Sales should be credited always. And then you debit the customer. The customer is the Sana trader here. On 15th, paid that 5 for electricity by check. Paid that 5. So electricity, remember, is an expense. What did we say about expenses when we pay them?
We debit.
Credit.
No, we don't credit expense.
Debit.
We debit expenses always when we pay. When we pay, we debit expenses. What we credit is either cash or bank. In this case, it is bank because it is by check.
Check.
Yes, on 16th, we withdrew 50,000 from the bank and put it in the cash till. From bank to cash.
So we open a cash account, we debit cash account and then we credit bank account.
Yes, you debit where the money will be deposited, you credit where the money is coming from, if it is cash and bank. Paid 5,600 cash for wages. Wages is another expense, so
Debit wages account, credit cash.
credit cash, it is cash payment, correct? Sana Traders returned goods worth 150,000. Remember, Sana Traders is still appearing on June 10th. The first transaction with the Sana was on 10th, and now it is being repeated on 20th. But on 10th, we sold goods. On 20th, the customer is returning.
Mwalimu, I can try.
Go ahead.
Under Sana Traders, I mean, we open an account for sales returns
Yes,
for 150,000.
yes. On which side?
Credit.
We cannot credit sales and
No,
credit
debit,
returns.
debit.
Yes, note that. That's the rule. When
Yes.
are returned, you debit sales returns if they had initially been sold. So we debit sales returns. Then who are we going to credit?
Sana Traders.
Sana Traders.
Yes, you credit the customer returning, who is Sana Traders. On 25th, bought goods on credit from Vico Traders worth 330,000. Bought goods, we don't have to think about it. We debit which account?
Purchases.
Purchase.
Yes, anytime we buy or we buy goods or bought goods, purchased goods, we debit purchases account. But this time is on credit, so we shall credit the supplier who is Vico.
For traders.
We credit the supplier Vico Traders because it's a liability account. Lastly, returned goods worth 30,000 to Vico Traders. Remember Vico tumenunua kutoka kwake. We had purchased from Vico. We are returning back. How do we call those goods that we are returning back to supplier?
Purchase returns.
Just returns.
Purchases returns. And it is the opposite of purchases. Purchases is debited. Purchases returns will be credited. And then we debit now Vico. Remember when we buy on credit, we debit purchases, we credit Vico. But when we return back, we debit purchases, we credit, sorry, purchases returns, then we debit Vico. Vico will be debited because initially the supplier had been credited. Debiting means we are reducing the liability. So can you proceed, open those accounts, record them neatly. Kindly try as much as possible to be neat. Use the rule where necessary. Don't make your accounts to be so congested. Make them a bit larger. And then you balance them, extract the trial balance. Then under topic 5, I'm going to create an assignment Dropbox whereby you are going to upload them there. I'll get them and have a look, and then I will respond to them. I don't want to give you a new or to teach you a new topic or a new area. I want you to digest that. Digest that. Then on Sunday, we shall conclude the topic by looking at a case whereby when you are given the opening balances before the transactions occur. Remember, in all the cases that we have done from the beginning to now, it is for a business that is starting. All the examples that we have handled from last week to now, it is for a business that is started business. That is normally the first transaction. What about now it happens that the business is ongoing? You are given the balances from the previous month, and now it is going on. How do we start with the opening balances and then progress to record the transactions for the month? This Sunday, I had to move out of town. I was not available. That's why we could not meet. And actually, the time that we were supposed to have the class, it is the time that I was traveling back. So this Sunday, I know we must meet. So that is enough. Unless somebody has got an issue somewhere, it is my position that we stop our today's class at that point.
Thank you, Mwalimu.
For those,
For the reading.
okay, maybe.
Someone wants to share WhatsApp group link.
Okay, let me do this. Let me share, or alternatively, just go to the LMS. You have my number there. Just send me a message on WhatsApp. I will add you immediately. Yeah. Those who have not joined on the LMS, just find my contact there, or I can just share it right now. I've just shared my number. Just say add me to the group, then I will add you. So let us stop there. Enjoy your evening.
Thank you.
Thank
Bye.
you.
Bye, Mwalimu.
Bye.
Thank you.
Okay, bye-bye.